Hello. In this video, I want to introduce you to this indicator that determines the market flow. I call this indicator the market flow version 5.3. So there's a lot of improvement, and the latest improvement is the version 5.3. And with this indicator, you can clearly and easily see where the market is going. This indicator is derived from my trading principle, my trading strategy, which breaks down the market into several layers before we combine them all again together to understand the market structure as a whole. With this indicator, it shows you a simple table right at the top here, and this table is basically telling you that the time frame, which if we go on the actual time frame, which in this case Y represents a year. So if we go on the yearly chart, then we can see that the yearly chart is going down, is coming down with a red candle right here. So the yearly chart is coming down. And if we go on the monthly chart, then we can see that the monthly market is coming down right here. This is the monthly market. Now, if we look at the signals with on the monthly chart, we can see that the quarterly signal is showing right up here. So the quarterly market is starting to go down with this signal. Yep. So the quarterly market is coming down on the monthly chart. All right. I can't show you the yearly market with the signal because there is not enough data. So I need more data of the market before I can show you before the indicator can show you the yearly market signal. All right. So in this case, in this market, I can only show you the quarterly, up to the quarterly market. So if we go on, for example, let's have a look at Tesla. Yeah, there is no yearly signal with the indicator. Let's go back to that market example. So it can only show you all the way up to the quarterly. The quarterly that's showing right up here, it doesn't mean that it lasts for 3 months. No, it means that it can it is just a name that's given to it. It doesn't mean that it lasts for 3 months. You can take it as the market direction that's happening for the whole year starting from this point. Yeah. So for the whole year starting from this point, it would go maybe all the way down until here, and it could take a few months. Okay, it won't just take 3 months. Okay, it would take a few months. So maybe it would come down all the way down here, and that would last for more than 3 months. It would last 1, 2, 3, 4, 5, 6, 7, or 7 or 8 months. We are not sure, but what it is telling you clearly is that the quarterly market is coming down, and we should follow it if we are trading over the next 6 months at least. we should follow that. So over the next six months, the market is coming down. And if you want to have a look at what's going to happen in the next 1 month, then we would be looking at a weekly market. The weekly market lasts more than 1 week. Okay, it can last 1 month. For example, in this case, it lasted 3 bars. 3 bars, remember? So 3 bars, 1 bar, no. So on the weekly chart, we can see that this weekly market lasted 2 weeks. 1 week here, another week here. And this weekly market lasted 2 weeks as well, before making slight correction and coming down further another 2 weeks or 3 weeks. From here to here, 3 bars. Each bar represents 1 week, so 1, 2, 3 weeks. It's almost 1 month. And from this point here, we can see that the weekly comes down for another 3 weeks. 1, 2, 3. So if you are looking to hold your position to trade over the coming 1 month, you could be trading what we call the weekly or the W signal. Okay, the W signal. The W signal will last you at least 2 weeks, or at least 1 week to 3 weeks. Okay. So if you're an intraday trader, then you would be looking at the 1 hour or 15-minute chart. If we go on the 1 hour chart, then what we can see is that we can see the 4-hour market. And the 4-hour market, like I told you before, doesn't last 4 hours. It lasts more than 4 hours. It could last 20 hours. It could last a day, or it could last just mere 10 hours. Right? So for example, in this case, when the signal appears and then we wait until this candle closes and we enter our trade, or when this signal appears right here, then we enter our trade right here with our stop loss set at the previous high, we could be looking to take profit when the market comes down all the way down here. Okay, we could also be looking at this price level where the market touched before the price level, and that is the end of our 4-hour market. Okay, that's the end of our 4-hour market, which lasted 5 bars. So 5 times 4, that's 20 hours. So if you are trading over the period of 1 day or 20 hours, then you would be looking for this 4-hour signal. Alright, so there are 2 parts to the signals, to this indicator. One is the trend table, the market direction table. The market direction tables tells you where the market is going for each market layers, for each market level, and also it shows you trade entry signals on the chart itself. With the trade entry signal, if you rely solely on this indicator, then we have an exit signal. So which means if you enter the trade short position. Sorry, let's not use this, because what I want to show you is that if you enter your trade right here, you can rely on this indicator to tell you that it is the time to close your short position, and the signal for the closing position, the closing price, will be indicated by the gray signal over here. Okay, the gray signal will be pointing up like this one right here, but it's not happened yet. So maybe it will, it will make a triangle here pointing up. Okay, maybe it would make a triangle here to point up, to indicate that that's the end of this market going down. Okay, we can use another example, right over here, where we have our 4-hour trend that's coming down from the top all the way here, all the way down to the end of this what I call it daily. But you don't have to know it if you're not curious about it. That's basically my strategy. So this trading signal tells you to open a short position right over here, and if you follow only the trade signal, you open that trade in the direction going down, you could be looking to take profit when there is a gray signal pointing up here. So that's the amount that you're looking to make. Okay, so when there's a 4-hour gray signal, that marks the break of structure, that marks the reversal that's bound to happen, or that may happen, or that will happen. Let's say may happen. So you close your position based on that. Okay, or what I would do normally is that I would take it portions by portions. So what it means is that if we enter here and there's a big market movement over this stretch, I would take my profit already, and then I would wait for a correction before another signal appears, and I would take my profit later, maybe at about here or here at this price. So which means open here, close here, and open again, and we can close here, or we can close here. Okay, that's what I would do normally. And another one, open and close. Okay, with that, you can rely on this E signal. So this E signal signifies it detects big price movement, and it catches the big price movement for you to close your position. So this is also another exit signal. So which means when you enter your position here, you enter your short position here, you want to close your position when there's an E appearing here. So which means you close right here. You close here. Okay, and you enter here, and the E appears. Unfortunately, the E appears right here, and you don't make money. In this case, you don't make money, and maybe you make some loss due to slippage and fees. But that's the market signal. That's the E signal, the exit signal. You don't have to follow the the exit signal, and you can follow the gray signal, which indicates the market direction. Personally, I like to follow the market direction better than the E signal. So the E detects market movement, and if there's a prolonged period of time market going sideways, it would want to close that position and wait for another entry signal. Okay, so another example, if you close your position here and another market signal appeared, then you open another short position, and another E appeared here, and you could be closing when the E appears in the middle of the candle, or you could wait until the candle closes, a new candle appears, and you close your market, your position, your short position. You make a bit of profit here. And then next one, you wait for the 4-hour signal to appear to tell you to enter your position. So you enter your trade position, and you wait for the E to appear. In this case, that's the end of our whole daily downtrend, and we wait for this gray signal to appear. So it's very simple. You enter your trade position using either the yellow signal or the orange signal, and you close your trade position using the gray signal or the E signal. Okay, very simple. And if you want to analyze the market, if you want to break down the layers of the market and analyze each layer, you can use this table right here. If the table is telling you that it's red, that means the market is going down. If the table is green, then the market is going up for that particular market. Okay, right, so it's quite simple. So in this case, the yearly is coming down right now. The quarterly is coming down. The monthly is coming down. The weekly is coming down, which means for the next 3 months, the market should be coming down. It can make a correction before coming down further, but overall the market is coming down. For the next month, where is it? Here. For the next month, like I said previously, it can be the end of this monthly market downtrend. It can make a bit of correction before further coming down, or it can produce a gray signal telling you to stop your short position, to close your short position, because this quarterly trend is now reversing up. So how do we see the quarterly trend? We go on the monthly chart, and right now the quarterly trend is still coming down, so you don't want to close that. There is no signal telling you to close that short position. Okay, it's very simple. This indicator, like I said before, it follows exactly my my trading strategy, which is proven profitable. So if you rely solely on this trading strategy, a trading signal, you can already make money out of it, which is actually proven by some of my members in my group. For example, this guy. So he tried testing the indicator, and when the signal appears, he went with the signal, trading in long position, and yes, and he made money. And so in this picture, you can see that the signal appeared and he went short. He went in short, and then his short position made a big profit at the end of the whole downtrend. So basically, that's very simple. This signal, this trading signal, follows my trading strategy, which is proven profitable. Yeah, it helps you analyze the market by following the trend tables right here. So everything is now made simple. Okay, thank you for listening to my introduction and explanation of my indicator. If you have any question, please contact me. Yeah.